Hey folks, how are you? Let's go over some trades here. So SPCE pulled back first thing today, and then we saw a move higher. I was looking to buy a break above the high of the day. I got in a little late, and then I had to endure a bit of a pullback. Now my mistake with this trade was going in too big to start and not leaving room to scale in, because at this point it was in fact likely that the bulls had a higher chance than the bears of becoming successful, but it still didn't mean that we could have endured a pullback before seeing any kind of upside breakout. So at this point, you could see that volume coming in there. This is the 1 minute time frame. Our pre-market low was here, and the high was 33. So that was the high we were watching this morning. So you can see we broke above it and got rejected initially, got sold into, and you can see it just faded, dropped off here like a lack of interest. And then if you waited a little longer, around 10 o'clock, you started to see a little bit of that volume coming in, creeping in slowly until we finally pushed above 33, and at that point started a mini short squeeze. So you can see what happened after that. Once we broke above 33, we pulled back, consolidated just above this level, which was the high earlier, 33.44, consolidated right to that level. And then after that, it was bulls in full control. And at this point, it was 35. Because when there's lack of any resistance, first of all, RSI goes out the window. And in my opinion, I've been not using RSI at all in my trading for the last month or so. And I have not noticed a difference in my trading. In fact, it's benefited my trading because less data to look at. Okay. So it's just more important to understand psychological price levels than anything. So I was looking, once we were here, I was saying 35. Above that, shorts are going to get squeezed. Now, I'm not saying that means that as soon as we hit 35, it's going to go to 38. It doesn't mean that. All it means is that 35, I watch what the price is doing at 35. It might hit 35, go above it, pull back, and then watch how it pulls back. If there's a lack of selling volume on that pullback, it can tell you that the odds are still in favor of the bulls. Are you with me? And then you can see we squeezed way up after that, okay? So I was long here in the morning, and I was scaling out as we were pushing up here. So scaled out, and then I just let it run. So I said at this point, as long as it's holding the EMAs on the 5-minute time frame, as long as it's going to hold the 4 EMA here, I'm going to stay in the trade. There's no reason to exit the trade. The market will tell me when to exit, okay? And as you can see here near the end here, near the end of the move, what is going on here? Yeah, so once we saw this, I wasn't at the computer. I had a stop order placed. And once I saw this and this, at that point, that starting to look a little bit like a blow off top, which means that it is likely, because of the size of this move, it is likely that even if we were to see a move higher, it would most likely result in a lower high rather than a straight break to higher highs. So you can see that I sold right here, and we did end up consolidating after that. So I'm not saying I knew that was going to happen. I just based that decision to exit the rest of the position based on, first of all, the loss of the 4 EMA on the 5-minute time frame. Once we lost that, I was out of the rest of the position, which was very small. And so that was basically my plan. So I stuck to the plan, and that was it. All right, let's get to the next one. So Tesla was a very quick short. Now, I was looking to trade Tesla long originally. As you can see here, we pulled back right down to the low of pre-market, and then it was a bullish move all the way up into the high of pre-market, which was about 860, 859. And once I saw it to fail around 860 on the 1-minute time frame, you can see right there, a bit of a volume climax on that candle, and half of it was a rejection. You can see right there on the break of that second red bar, that is where I decided to take a short position. Small position with the stop generally above the high of the day or above 860 to be safe. And the risk would have been, the reward would have been just around here, 852. So I'm risking approximately 2 points for like 8 points. So that's generally a good risk to reward, you know. And you can see that we did try to move higher, came up, formed a lower high, and then broke down to the lower, and then that's where I covered the rest of the position. Actually, that's where I covered all of it, I believe. So I covered a little, and when we got back to my break even, I covered it all. Yeah. So that's Tesla for you. Nice little short there, mini short scalp. LYFT, I was looking to trade long today because if you look at the daily chart on LYFT, it's been very overextended to the downside like 3-4 days in a row now. So looking for LYFT to potentially change directions here. I find I am kind of in the way of that. There we go. So I marked in a few key levels. One was the high of the previous trading session. The high of the retrace of the previous trading session and the close of the previous trading session. So watching today's price action, you can see on the 1-minute time frame that we did try to move lower, caught the low of pre-market at 44.07, pretty similar to what Tesla did, in fact, and then we broke higher. So my mistake on this trade was not getting in here and here. I wasn't watching it. In fact, I was doing something else. I think I was trading Roku or something else. So basically what happened was I think I ended up getting in late somewhere up here. And then I ended up, that was, as you can see, that was near the top of the move. And then I just stopped out for just a tiny loss down here, because it was just not doing anything. Okay, so that was a failed trade, mainly because I missed the edge and tried to chase it. So don't chase trades, guys, very bad. Roku, I love Roku. Just because, yeah. Anyways, here we go. So last week was an absolute bloodbath. So the levels I marked in were the high of the retrace, the low of the day, the low of this pullback here. Just a second. Yeah, the low of that pullback, and that's it. So this low right here is 127.99, approximately 128. Now, the reason I didn't put in the low of the day is because I believed that when a market has reached a certain point, or when it's pushing past a certain point, there is like a point of no return. And if you're able to identify a point of no return where the odds tend to shift in one favor or over the other, then that is considered the point of no return. So in my opinion, this was the level of point of no return. So if the bears were going to start breaking below approximately 128, not 127.40, that for me was the point of no return. So yeah. So as you can see, we moved higher, tried to test the high of pre-market, I believe. Hold on, let's see. Yeah, we moved higher right until here, 133.55. Now I did take a long there. You can see my first trade of the day on Roku was long. Look at that, long right there on that break. And as you can see here, I sold it for a scalp. I sold the entire position. So first trade was a win. But the thing is, I didn't actually intend to sell the entire position there. I was trying to sell about half of it. Now, obviously in hindsight, it's nice that I sold it all, but I would have sold it anyways after seeing this right here. So there you go. After that, we got a nice bloodbath of red candles right down until I was watching it when we were down here. So the low of the pullback of the previous trading session. So not the low of the day, but this pullback, you see. And then obviously that point of no return, which was 128 support. So I was looking at what it was going to do around these levels. So as you can see here, 1 minute time frame, first sign of the selling stopping, I'm trying to scale in long right there. So buy the dip right there. Stop loss below 127.40. Scaling out. Scaled out. Did I scale out the entire position? Yeah. That was the entire position right there. Then again, we came down to test it. Tried another time, buy the dip. Sold a little bit here, and then when we broke down, at this point I saw this kind of pattern where you can see with like a lower high / double top, and that is actually a very bearish type of formation, saying that the bulls tried twice to hold the support, once, twice, couldn't bounce higher than that. That's weakness, and then we got the bear break. So at this point, I reversed my bias on the trade. I said, you know what, time to go short, just based on this price action. So I did go short here, and there you go. So we did bounce, little mini bounce, but I knew that if I was going to take a short here, my stop was probably going to be above these highs. Shorted it there, endured this little mini flag, and then we got the bear break, and I was covering. So at this point, bears are in full control. You can see that they're holding the 4 exponential, the 12 exponential on the way down. So there's no sign of any buyers there. In fact, the long traders from last week are trapped. That's why we're selling. We're selling because anybody who bought the dip last week is now getting forced to sell. Simple as that. So you can see here, I'm slowly covering the short position as we're going lower. And then finally, when we reach this bottom right here, now this is just arbitrary. It's not based off of any price level because we're in black dirt breakdown. Well, not necessarily, but like there's no real price level I'm basing this off of. All I was saying is at this point, as soon as I see it close or any kind of bullish momentum or the selling just stopping, that is when I will look to buy the dip again. So there you go, right there. Buy the dip right there. Now, obviously, I'm not going the same size position as on the other trades here. I'm going a little smaller, just risking the profits from the previous trades. So buy the dip on the second green candle, tried to close above the 4 EMA. And as you can see, we grinded higher from here. And my target was, in fact, right there, right under 127. That was my target for the trade. And the rest I was going to let run. So I took off 2/3 of the position at my target, which was just under 127. And it was just, in fact, where the 26 EMA is, because that is a place that the market tends to retrace to. You can see that we did pull back here, formed a higher low, and then tried to move higher at 128. And 128, if you look at that, that was the level. Wasn't that the level that I said was the point of no return? It just happened to kind of test right to that level and then faded lower after that. After that, it was a lack of interest in the stock. I stopped out the rest of the position here for break even. And I took, since I took 2/3 off here, that was totally fine, right? So that was Roku for you. Roku rocks in the first hour and a half of trading, and after that, it's dead zone. Don't bother with it, okay? I think that's it. I think that's it, guys. Did I do all of them? Tesla, LYFT, Space. Yep, I said all of them. That's it, guys. Cheers.